Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for the FOMC report. We're going to cover it all live. We're going to be there with you, giving you all the numbers. I'm also trying to trade live as well. I've got a position here, which I'm in the middle of. Am I going to sell my Coca-Cola and buy back the S&P? That's a live trade. It's all happening here in the studio. Get ready, and we're also giving you some magic numbers as well in the show so you can win tickets for our $1,000 XRP giveaway. So in just a few seconds from now, I'm going to give you your first magic number. I hope you're set. I hope you're ready for an explosive afternoon. We're going to be all over the place. A lot's going to be going on. We're going to be watching our crypto. Is it going to explode today on a rate decision? Who knows? Am I going to get my trade done? I'm looking to trade out of Coca-Cola once again, back into the S&P. It's very, very close with $43,000 live on the show. So let's get ready. Tap the like button. Share this out. In a few moments time, I'll give everybody their magic number. There are going to be 3 magic numbers so you can win today's competition, $1,000 in XRP, which you can sell for cash if you want to. Okay, let's make sure everybody's set. Everybody's ready, and we'll get into it. We've got the announcement in just a few moments time, and then of course we have the speech, and then we have of course the press conference. It's going to be a very, very volatile afternoon. What is Trump going to say? We'll get all the reactions. You can call in, be on the show. Plus we have a big event coming up after this as well. There's back-to-back, and we have the Robinhood earnings. This is very important after today. That will follow later on this afternoon at the closing bell, Robinhood. So first of all, I'm going to give you the link to phone in. If you want to be on the call during this event, live video, phone in. This is for members only. Members only, please. If you want to be on the call, very often when we do the FOMC reports, you like to be live on the screen with me. This is the screen here. There are 10 spots. It's first come, first serve. What you do is click on that link. You don't require any software. I take care of all of that. You can just call in, but you do need to let me know you are calling in by putting your name in the chat so I can see that you are a member and I know who you are calling in. And then when you call in, I'll pick up the phone to you. There's 10 spots, first come, first serve. When the 10 spots are gone, they are gone. So you do need to let me know in the chat that you are calling in. I will not pick up the phone to you unless you tell me in the chat you are calling in and I can see that you are a member. Again, do not call in unless you give me your name in the chat. I do not see you, cannot pick up the phone to you unless I know who you are. So are you ready? I'll tell you what we're going to do. We're going to start because I'm about to give away a magic number right at the top of the show. We're going to give away a magic number at the end of this song then. So what I want to do, I want to get to, there's 600, I want to get to 300 likes. 300 likes by the time this song comes to an end. Are you ready? If you are calling in, you have to let me know in the chat. People are trying it and you're getting nowhere. You're just not making any sense, just sitting there in the dark. You have to let me know you are calling in. Okay, it's members only time. I will disappear. Okay, it's not members only time. Why are you saying that, VZF Cat? It's not members only. It's free to enter, free to all. Anyone can win the $1,000. You don't have to be a member. And you are chatting in the chat with me now, so it's nothing. It's not members only at all. Okay, we're about to give away our first magic number. Anyone can enter. It's free for all for $1,000. We need 300 likes by the end of this song. Let's go. Tap the like button. Share this out. FOMC Day. We've got 629 people watching. There it is. So we can get 300 likes, which is 50%. 629. Right, how many have we got now? We need 300 likes in 1 minute. 88. Let me refresh the screen. Here we go. Refresh the screen and 159. We're halfway there. 300 likes by the end of this song, and we'll give away our first magic numbers to win $1,000 in XRP. Or you can sell it for cash. It's entirely up to you. All right, 189. Tap the like button. Consider being a subscriber to the channel at 200, 204. Let's have a look at our crypto. We've got things moving right now. We have got Bitcoin is down very slightly. XRP is up. We love it, love it, love it. Have you subscribed to the channel? 93,271. If you are a subscriber or a member, when we get to 100,000, we have a big party planned for you and a special one for the members. All right, let's go, 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 go. How many likes have we got now? Are we nearly there? Let's have a quick look. We need 300 likes to give away our first magic number, 251. We've got 30 seconds to go. Tap the like button. We need 300 likes by the end of this song. Come on, let's go, 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 go. 257. We've now got 642 people watching. If you are calling in, you have to let me know you're calling in the chat. If you don't tell me you're calling in, I cannot let you on the show. All right. How many we got? 262. 262. We're nearly there. Just a few more. So once again, I've given you the link to phone in. 275. 25 to go. We're about to give away a magic number so you can win $1,000 on XRP. Diana K. Mum. I called. You have to let me know you're calling in. I don't know you're calling in. Diana. Okay, Diana Mum. Diana Kamum, whatever that is, sorry. Diana, if you now call back under the name of Diana, I'll pick up the phone to you. 287, 13 to go. We're nearly there. We want 300 likes. If you want to call in, be on the show, then you can be on the show. 293, 7 to go. We're going to count it down in just a couple of seconds now. 293, here we go. 293, 300, and we give away our first magic number. 295, 5 to go. And you can win $1,000 in XRP paid out live on the show. And we're about to give away the magic number. So Joseph, I'm calling in. Okay, if you are calling in, I have to see you in the chat. Here we go. One more person and we can give away our magic number. Are you ready? The FOMC. Oh, there we go. We've done it. We've done it. And we are in. Thank you. Our first caller is Joseph. Joseph wants to be on the show. Joseph, you're not on camera. Where are you, Joseph? I'm picking up the phone to you. I don't see you on the camera. I can't bring on an empty screen. Okay, there we go. 309. We did it. Joseph, I do not see you on camera. So you've called in, but you're not there. So I'll have to hang up again if you don't come onto camera. Okay, if you want to call in, just let me know in the chat. So our first magic number, ready to bring everybody on the show. So are you ready? Brian, are you calling in? You haven't told me in the chat you are calling in. Hello, Joseph. I see you now. Brian, is Brian calling in? You didn't put in the chat you are calling in. I can't pick up the phone to you until you tell me. Oh, it's Brian. There you go. You're now telling me it's you. There you go. All right. There you go. You got to tell me you're calling in. Otherwise, you're not on camera. Yeah, no, you're not on camera, Brian. I'll hang up. Oh, there he is. He's on camera now. Right, let me bring our first two guests in as I give you your first magic numbers. So here we go. Our first two guests. We've got Brian and we've got Joseph. How are you, Joseph?
There we go. I'm back again.
You're back again. How are you, mate?
Remember earlier? Yeah.
I remember earlier. Yes.
Yes, sir.
Can you just mute YouTube TV for me?
I did.
I think it's Joseph. There we go. That's better. I think Joseph is just running around. Let me just go and mute Joseph. There we go. I'll just mute Joseph for a second. Oh, he's done it now. Great to have you here. Brian, you called in earlier. A lot of people were very concerned about you this morning. With that guy, how did that all go after that?
I never even looked at it yet because I have an hour drive because I work out in the middle of the desert. So I'm here in my apartment now. So I didn't go back on that website or anything. I'm just waiting for that guy to text me or email me. That's all.
Let me know when you get more information. We're all looking out for you. Joseph, good afternoon. Where are you calling in from?
I'm calling from Alaska.
Alaska, great to have you here.
Oh, wow.
How are you, Joseph?
Doing pretty good. I have a hold
I can't quite hear you. Say that again.
yeah, I got it. I got too many windows open.
How are you, Joseph?
I'm doing pretty good. I'm back into crypto after you started giving away XRPs. I was like, yeah, I gotta get back in. So.
All right, I'll come back to you guys in a minute. You're going to be on the big screen during the FOMC report. So there we go. I'm going to start putting you in your spaces. So I'm going to put you over here. So we've got whoops a daisy. I've got all these things opening up. Yay. So I've got Brian now down there. Number one. We'll put this down to number one. Guest is number one. There you go. Joseph is down there. You might need to realign your screens, guys. You're a bit zoomed in, but I'll clear off the screen in a minute. When I bring you back here, this will all be full up by the time we get to the FOMC report. Right, I've now got to give my first magic number away. So what are we doing here? Let me explain to everybody how this works. We're giving away $1,000 in XRP live on the show, and it's free to enter, free for all. And in today's show, we're giving you 3 magic numbers. You add them together. At the end, you'll have a sum. The 3 added together, one in the middle, one at the beginning, one in the middle, and one at the end. Add them all together, and then you can go and enter the competition to win tickets to win the $1,000 in XRP. So let me explain the rules for those of you that are new to the show. We've got just 15 minutes before we get the FOMC report numbers, so we're on standby for that. So just hold on just a minute. Let me give you the competition rules so you all know how this works, okay? Let me just put the competition in the chat here for you. It's martynlucas.com/giveaway. martynlucas.com/giveaway. I'll put it in the chat for you there 3 times so you can see it stand out. Okay, everybody got that? martynlucas.com/giveaway. This is the giveaway page. Remember, it's free to enter, free for all. You can win with 1 ticket or get as many as you like. There's no, you don't have to be a member to win. You don't have to be anything at all to claim your free tickets. And you can win with 1 ticket or you can get as many tickets as you like. And if you scroll down, there's lots of ways to win. And every day we have more things to win. We have a daily bonus. Every day you come back, you get free tickets. On September the 15th, live on the show, 3 p.m. Central Daylight Time, we're going to give away $1,000 in XRP, which you can sell for cash live on the show. Only 4 people have done all the ticket options. Only 4. And there are only 220 something people in the competition. Look, only 269 in the competition, and only 4 of those have done everything. So the chance of winning, if you're not lazy and you want to get involved, is quite good, I think you'd agree. All right, so today's competition, what we're giving you tickets for is this. If you look right at the top, it says here, enter here only, not in the chat or the comments on the live show, otherwise you're giving it away to everybody. The magic number found in the video. That's this video live right now. You're watching live right now. Only available for a limited time. So if I have something else I want to do, I will take this away. Normally 24 hours, 36 hours, I take it away. This won't be here anymore. The competition is, but this entry is gone, okay? It gives everyone the chance to do it who's here today. I will give you 3 numbers, 1 at the beginning, 1 in the middle, and 1 at the end. Add them together, then post here to win. You put your number in there. You can't guess more than a couple of times, otherwise you'll get me closed out. So don't try guessing. Just simply write down this number, add the 3 together, and at the end of the show, you put in your number here, and you will win a staggering, I think this one is 100. Yes, 100 tickets, 100 chances to win today's, to win our XRP giveaway. So, here is your first magic number. Crypto is going sideways. The S&P is going up. My trade of the day is here. I'm waiting to sell my Coca-Cola for a profit and buy the S&P back on a dip. I've been in this trade all day and it hasn't happened yet. I'm just waiting. So I'm going to keep my eye on that. And I'm now going to give you your first magic number. So have you all subscribed to the channel? You all done that? Have you all tapped the like button? Okay, here comes your first magic number. Write this down. There'll be 1 more in the middle and 1 at the end. Today's magic number on the show is 768. 768. 768. You all got that? Okay. Now, if you've missed the show, of course, you can rewind it back. This will be here forever. So you'll have to sort of go through and find out where I said it. But that's where I said it. 768 is the magic number so far. Okay. Now then, we are just a few minutes away from our FOMC report. Let me show you what we're expecting. If we scroll down here, this is the announcement. We're going to get this in just a few minutes' time. Let me go over to here. The Fed rate decision, the forecast, 4.5, consensus, 4.5, previous, 4.5. In other words, no change, pause, nothing happened. No one's expecting a rate cut at all. I, however, am the very small minority. I think we will get a rate cut. Now, I was wrong in June, and I said if we don't get it now, we must get it in July. It's July. Will we get it today? If not today, it'll be September. Now, we can always get emergency rate cuts. They're not good, however. So the Fed, if they've held this long, will hold until September. I say we will get a rate cut. I know it's unexpected. Nobody expects that, but I think it's due, and I have to look at the numbers and the facts as I see them, and I say, yes, we should and have a rate cut today. Will we get one? I don't know. The majority of people say no, it'll be a pause. But, however, I am saying we will get a rate cut today. We should get a rate cut. Now, what will happen if we get a rate cut? What will happen if we get a rate cut today? Well, first of all, the market is pricing in no rate cut. So we're here where we are. The market's been up and down today. People have been chasing the market, and I've been saying wait and hold. There is my whole position. I've been trading in and out of Coca-Cola over and over again. If you are calling in, let me know you are calling in the chat, please. Let me know you are calling in the chat if you want to be on the show during the FOMC report. Don't just call in. I need to know you remember. Thank you very much. All right, I will not pick up the phone to you. So what will happen if we get a rate? If we get a pause, I don't think anything will happen because no one is expecting a cut or anything anyway, and the market is already pricing that in. If, however, we get a rate cut today, what that will mean is more liquidity into crypto. I believe that our crypto will go up. And as you know, I'm now in crypto. I have $17,000 of crypto. I've only been buying it now for a week or so, just started. So I've got quite a bit. I am out of the money. I only own Bitcoin and XRP. That's all I own. That's all I'm holding, Bitcoin and XRP, and I'm out of the money on both of those. Doesn't matter. I bought them purely for the competition giveaways, and I also am a long-term investor, and I can see Bitcoin going to 200 to 250,000 this year, and XRP imminently. Okay, most certainly in September or October. So I don't mind being out with the money, but I won't buy any more unless it goes down significantly. Thank you, George Lambert, for becoming a member.
George Lambert has become a member.
Thank you very much. We got 9 minutes to, 10 minutes to go before we start. So that's my positions. Now, I started with $5,000. I'm now at $262,737. No options, no shorts, and I've only recently entered the crypto space. I've been in it before, of course, when XRP was 38 cents, but that's another story. So Bitcoin and XRP is my position. My overall portfolio is the S&P, of course, with that XRP attached to it. And I trade on my Roth IRA tax-free over and over again. I've made $1,000 in the last 24 hours by going in and out of VU to Coca-Cola over and over again. And I explained why I choose these stocks to trade in and how I do it on this morning's stream. I gave a whole explanation of how this works. So as soon as we get both things happen, if Coca-Cola goes up, that means there's volatility in the market. Money will move out of tech, the S&P 500, and it will flow straight into Coca-Cola. As you can see, Coke is going up at the same time as VU. But at any moment, we could get volatility. I'm ready to sell my Coca-Cola, but I will not sell Coca-Cola until there's a position to go into, and that would be VU. And the reason for that is if I sell Coca-Cola, I know it's going to $80 anyway, so I'm in no rush to sell it. If I sell it, both assets continue to go up, and now I'm chasing stock. I never chase stock. I never lose. So I'm not going to do that. I'm going to wait until both positions are good. So Coca-Cola needs to be up, so I've made a profit on today's trade, and VU needs to be down on today's trade. The idea is accumulating more and more stock as I go. That's the idea. So I'm not going to move, even if Coca-Cola rallies 10%. Because there's nowhere to go with the money. If I just park it in my Roth IRA, I don't earn any uninvested cash in your Roth IRA. You don't. So there's no point parking it there and then waiting to see. We don't gamble, we don't guess, and then we hope that it comes back down. No, we do nothing until we can move both pieces at the same time. So we're waiting. Now, Coca-Cola is doing good now. It's starting to move. You might say that's only 0.1%, but on 45 grand, it's quite significant to me. I'm very happy with that. And then when S&P starts to go down, then I'll act that trade. But for now, I'm just waiting. Crypto is on a wait and see right now. It's right on the line, and the S&P overall is up very slightly. 8 minutes to go. Everybody now has their magic number. So in the next 8 minutes, if you want to be on the show, we now have two guests. Two guests are live on the show. If you want to call in and be with me during the FOMC report, the link is in the chat. Live video phone in. Just tell me you're calling in. Give me your name. I can see you're a member, and I can let you into the show. And then that way you can react throughout the stream. We have Joseph and we have Brian live on the show. There are 8 spots left. If you'd like to be on the show during the call, you can talk to me. You can react to what you're seeing, and you can be part of today's show. There are 8 left, and then we can have a debate. We can have a very excited debate. Actually, earlier on today, we're talking to Brian, who was live on my show, and we'll talk about what he was talking about this morning once we get all our spots filled up. So stand by, gentlemen, and ladies, of course. 13% of our audience are ladies. Please call in and join us for the live call. Okay. Now then, I've got 8 minutes to go. So I'm going to give you a few links that you might need. Here we go. Has everyone tapped the like button? Has everyone subscribed? We are nearly at 100,000 subscribers. If you are calling in, let me know you are calling in the chat, please. I don't know who you are until you put in the chat, I am calling in. Very, very important to put in the chat, you are calling in. Otherwise, I will not pick up the phone to you. Okay. So here are all your links. If you want Seeking Alpha and Alpha Spread, if you've ever wanted these softwares, they are expensive. With my referrals, you get discounts and free trials. If you want to join the music show every Friday night where we do XRP songs like this. XRP, always believe in your flow. Every Friday night, we have a live concert. That's me with my own video of XRP. I've got many of those. Join me on the music show on Friday. Follow me on X and Instagram today. Not only can you enter the competition by following me on X, I will also pick somebody out today randomly. We'll spin the wheel and make one of you famous live on the show. If you are calling in, let me know in the chat you are calling in. There's no point calling in unless you tell me in the chat you are calling in. I don't know why people don't listen to that. All right, okay. The next link that you might need is a Discord. We got 6 minutes to go now. Sorry, 5 minutes to go. We have a free training course. We don't charge for training like other channels do. Why? Because we make money doing what we do, investing. We are self-funded. We don't take sponsorship. We do it all ourselves. We earn money from what we do, and there we go. So if you want to, I was looking at XRP. Sensei just went with XRP. I'm not sure what that was all about. Anyway, so if you want our Discord, it's there. You have to purchase it. $2.99. We can't make it any cheaper. And if you do that, Justin Duke's calling in. Spot number 3 is gone. Thank you, Justin. I shall put you in spot number 3. Thank you. Just 7 spots to go. The call, we've got 5 minutes to go. When you go on to Discord, make sure that you click the purchase. It is only $2.99, and then we give you for free, we give you for free the training course. We could charge money for it, but we don't. We make it for free. Simply purchase here. Don't click on join server at the top. If you do, you'll just go into a blank page and you see nothing. You click purchase here and we give you a training course for free. Okay, just so you know how it works. There's Discord. Any more links? Yes, if you want to become a member, there is the membership link. We have members-only videos, members-only live streams. In a moment, we'll go members-only because it will get very, very busy. Only members can call into the show. Only members can order themselves earnings calls. Only members can order stock reviews and charts to be done. All our CEO interviews are members only. Many, many perks that you get as a member. If you are Stuart's calling in. Spot number 4 is gone. Spot number 4. Stuart's live on the show. There we go. Thank you, Stuart. You're live on the show. Just 6 spots to go. 4 minutes to go. So if you want to become a member, there is the membership link. If you are on an iOS device, iPhone or iPad, select a browser and desktop version, and then you can call it in, and then you can become a member. Nearly 2,000 of our live viewers are members, more than any other channel in the world, percentage-wise. 98% of our live viewers are members, 13% are ladies, and our benefits increase all the time. The price never goes up, and that's including inflation. It gets cheaper and cheaper every year. And when people become members, they tend to stay. If you're a silver member, you get extra benefits. Gold, you can call me directly and privately and have one-on-one calls with me. Sponsorship member, we can promote your channel or your business to the world for $99, thousands of dollars cheaper than anybody else, because I don't take sponsorship from outside of my viewers, my members. And then we have 2 platinum investors who pay $500 a month to get their very own videos and live streams, which they get for themselves. Okay, 2 minutes to go. Let me now go over to our guest. We have our bottom line full now, so let me clear away my tickers and bring in our guests. We do have so we have quite a few here. Stuart, good afternoon, and welcome back to you. Justin, how are you, Stuart?
I'm doing all right. How about you?
Thanks for having me.
I'm well. Where are you calling in from, Stuart?
From Maine.
Maine, lovely. Thank you for being here. And Justin, where are you calling in from again?
Dixon, Tennessee. It's close to Nashville.
I love it. He always reminds me of Elvis Presley. He lives just down the road from Elvis. I love it. Okay, great stuff. If you want to call in and be on the show and react to today's FOMC, you can. We are 2 minutes away. If you want to call in, let me know you're calling in. Stuart, just quickly, you're new to the show, right? First time caller.
Yes. Yeah, I am.
You are. How long have you been a member, sir?
Probably about a week.
Oh, you're quite new. What is your main investment strategy? What are you investing in?
Oh, I'm investing in XRP and Bitcoin and Ethereum just long term. Not looking to. I'm new to the space, but it's a wonderful space to be a part of.
Indeed. So. Have you entered the competition to win $1,000?
Sure have. Yeah. For the diaper fund there, Martin. For the diaper fund.
Good luck to you. The chap just next to you in the window next to you is oh yes, I remember the diaper conversation. Yes, I remember that now. The gentleman next to you is Justin. He is he's in the top 4, have done all the tickets. Only 4 people have done all the tickets. So he's in a top prime spot. Just because he has all the tickets doesn't mean he'll win, though. Only takes 1 ticket to win, but he is our number 4, near the very top, joint 4. Okay, here we go, guys. Stand by. Get ready to go. We're about to make an announcement. Let me refresh all my screens. Make sure we're up to date. Here we go. 1 minute to go. We are now counting down. 1 minute to go. Very exciting. Right, I'm checking all my multiple sources. We want to make sure that we got it coming from every angle. There we go.
With low and middle income
We've also got this stream here. We've got backup streams running absolutely everywhere. 15 seconds to go. Who's going to give me the news first? All right. What's the market going to do? Let me watch my position here. Am I going to be able to trade this? We got 3 seconds to go. Here we go then. Here we go. Who's going to give it to me first? It's a pause. It's a pause. No movement at all.
Range of 4.25% to 4.5%, even though policymakers say that economic growth moderated in the first half of the year as, quote, swings in net
markets hardly
exports
moving. There you
continue
go.
to affect the data. Uncertainty about the economic
Crypto,
outlook
not
remains
much.
elevated, their statement says. They dropped the suggestion in the last statement that it had diminished, but there are no hints about future moves. In considering the extent and timing of additional adjustments to the target range. At the moment, labor market conditions remain solid and inflation remains somewhat elevated. Those were the characterizations used in the last statement. As anticipated, Governors Chris Waller and Mickey Bowman dissented the first time, as John mentioned, that two governors voted against a committee decision since 1993. They preferred a quarter
Here comes my
percentage
trade
point
on
cut.
Coca-Cola.
Governor Adriana Kugler did not attend the meetings or vote on policy. The Fed says
Crypto doesn't like it. S&P doesn't like it. There's my trade on Coca-Cola that's coming.
Appreciate it. Fantastic breakdown as always. As expected by many of you, policy unchanged. Two dissents, two governors, as Mike repeated, the first time since 1993. In the first paragraph of the statement, the committee says the labour market remains solid. This is the issue that Governor Waller has with the labour market and that kind of communication and language. When he made the case to cut interest rates in the last few weeks, he thinks this is a labour market on the edge. Ultimately, at this meeting, he failed to convince the rest of the committee to go with him.
Although he did get another Fed governor, and I am curious to see what their justification is, especially after the ADP report, the better than expected GDP print, a whole host of other economic data points that have come out, as well as earnings
places where they've
that have
been
continued
on
to
the wrong
surprise the
side of where
upside
things are
more
going. It's a little hard to see what's happening. I think what I would look at, Brian, is the data. The Fed gets 2 months of data between now and the next meeting. 2 months of inflation data, that
now
is.
stand by for the conference. That's more important than this.
Continued
my trade is coming for Coca-Cola.
You have continued.
Told you to wait. There it is. It's coming.
But other parts of the economy are not showing it, such as the total number continues to be well behaved.
Yeah,
the Fed could cut.
It's coming.
And again, if there is a serious move downward in the job market, I think the Fed would cut again. But right now, I think you have to wait for the data, and it's really hard to front run all of this. I'll wait to see the percentages when we're done here. I can look them up and see where we're at in terms of the probabilities. But they were around 65%, which is confident but not overly so about a September rate cut in the market.
Yeah, and we're going to look at that right now. The CME Fed tool, of course, you've got your own with the
okay,
amazing
I'm going to
Fed
come
survey.
to our panel. As you can see now, what we've got another pause. As everyone expected, I really wanted to see a rate cut, but never mind, we've got a pause. What's important is this. I'm going to come to my panel in a second, bring you all on the screen. I want to get your reaction. So you can see the S&P is not that happy with this. No surprise. It was built in, but now people will just take profit anyway and go again. Crypto was hoping today would be a catalyst. We'd get a rate cut. That would be a massive surge for crypto. So crypto pumped today falsely. People were trying to pump it just to dump it. And I warned everyone, do not chase it. As it happened, I was right again. Do not chase it. Let it come back down to you. There's no trade here with crypto today. They didn't get what they wanted. And I am going to 100% get what I wanted. And that is to sell Coca-Cola. It's going up on the defensive side. The S&P will trim off during this call. It will go down. Coca-Cola is now in profit. All we need now is the S&P to go down, and I will do that trade. There's no point doing it until both parts are in play. I've got to be up on Coke and down on the S&P. 100%. You can't just move one piece and then another one, because then you're just chasing and then they both go up together and now you're out of the money. So the most important part of this will be in 20 minutes when we get Jerome Powell speak on stage for the tone. But let me now go over to our panel and see what you think. Now, we did lose one of our guests, unfortunately. So Joseph, let me come to you first of all. How did you feel about that? We got a pause. Is that what you were expecting?
Yes, absolutely. Market has been doing very well, especially in the crypto. We had a nice run with XRP, and Bitcoin is going strong. I know it pulled back a little bit, but I don't see a rate cut until something drastic happens, like the stock market, like S&P 500 goes down or something like that.
Okay,
that's what I think. You know?
Okay, thank you for sharing your thoughts, Brian. What's your thoughts today? Did you get what you predicted or what you hoped for?
Well, like I said, I've only been into the crypto and investing in this for about a year and a half now. So learning about online here and what they're doing, I don't know much about it. So if they're at a pause, I actually honestly don't know if that's bad or good. So that's where I'm at. I don't know.
Well,
I'm learning it. So
that's very honest. Well, let's break that down just so you understand a little bit more, maybe. For the S&P 500, which is 30% of the Mag 7, so you things like Apple and Microsoft and Google's, they don't care about rates coming down. Doesn't bother them. In fact, they make money when the rates are up. They earn money from their piles and piles of cash. They make less money. Yeah, right. It's painful for smaller companies, the small caps, the Russell, those that are trying to get off the ground, those that are trying to borrow money and get going. They want the rates to come down. It brings more mergers and acquisitions. It brings out more IPOs. It brings on other stocks like liquidity, like crypto, for example. But having, like Josie just said, XRP and Bitcoin still done pretty well with high rates that are high. So the Mag 7 it doesn't really bother them. Okay, and 30% of the S&P is in the Mag 7. So it's different things to different people. A rate cut today would have been a stimulus to the crypto market. It would have brought a lot of liquidity in, and it hasn't happened. But it's going to happen. The fact that they haven't hiked rates, that's the problem. If you hike the rates, then we're in trouble. That's when things are going bad. But holding on a pause, is okay. It was what the market was expecting. I would have liked to have seen a rate cut. I think it would have been great, but nevertheless, we're okay. So for the consumer, it's tough. So for your mortgages and your car loans, it's tough. Yes.
Well, are they waiting for all the banks to implement XRP because they're doing away with SWIFT? So that way, when all the banks work out all the pros and cons, then everything will start to work out?
No. The Fed's job isn't that. The Fed has a dual mandate of stable prices and strong employment. That's their job, nothing else. If the Fed didn't exist, inflation would run away and jobs would just go all over the place. To have a stable economy, and why America has such a strong economy, the job of the Fed is to control inflation, keep it under control, and keep jobs under control. That's all they care about. So all the other political stuff and all the other stuff and crypto and this, and they don't care about that. They have two jobs, a dual mandate, no more, no less. So this just means the economy is strong and it can support a high interest rate, and the bank are just waiting. The Fed are just waiting and seeing. Now they still don't know. And Jerome Powell has gone on the record to say that he would have reduced the rates by now if it wasn't for the tariffs, because we still don't have all the data for the tariffs. Will the tariffs give us inflation? We don't know. Some say yes, some say no. I say no, it's transitory. It's a one-off payment and then it just stays the same. People go, no, it's going to go up in price and keep rallying. That's not how tariffs work, but we'll wait and see. So the Fed, being responsible, whether you like them politically or not, they're saying we can't move until we see something change. And we don't know what the Fed deal is yet. So we don't know what the tariff deal is yet. Now, people political who like Trump will say, it makes no difference. It's fine. Lower the rates. Those that hate Trump will say, yeah, the market's going to explode and we're all going to go bankrupt. So, it depends on your political view. The Fed's job, supposedly, is not to be political. Whether they are or not, you can decide. But the job is stable employment and inflation under control. That doesn't mean prices get cheaper. They don't. Prices still go up by a minimum of 2% every year, but they don't go up more than 2%. That's the goal. All right.
Well, I thought Trump was saying August 1st when that's when all the tariffs are coming in. They said all the money from all these other countries is coming in, and August 1st is when we're supposed to know how many trillions that we're supposed to be getting, and everybody's supposed to be getting paid, whatever he meant by that.
We have been receiving money. Yeah, the government and the administration have been receiving money from tariffs now for months. August the 1st was the latest deadline. China has been kicked down the road, but they're still paying tariffs. It's just we haven't got a final deal with China, but people are still paying tariffs. The argument is, where does the tariff money go? It gets passed on to the consumer. We can debate that and whatever, but that's where we stand right now. Justin Duke, what's your thoughts today? We got a pause. I think you're expecting a pause, and how do you feel about it?
I've just expected it. I believe maybe I'll have an opportunity to buy something in the red. You know, the red is opportunity.
Yes, yes.
I do feel that the decision is political.
You do?
He looked pretty guilty the other day whenever Trump was with him. So
it was quite a bit of TV, wasn't it? When Trump, who towers above him, upwards and wide and everything else from front to back, he looked like a little frail old man stood next to him, and he banged him on his back. I thought he was going to fall over, quite frankly. Thank God he didn't fall over. But yeah, it was quite a moment. But I'm sure Trump is very upset today because he said, "I think Jerome's going to do the right thing." Well, eventually, of course, Jerome will lower the rates in September, but I think he really wanted it to happen today. I think he's tired of this. He's bored of it. He's fed up with it. Anyway, so I'll come back to you guys in a moment, and we've got 15 minutes to go. I will be giving my second magic number shortly, so stand by, and then one at the end. And then today we also have our event. We have right after this, we have a special EV toll emergency announcement. Lots of EV tolls exploding, and all, not literally exploding, but stocks exploding. And then we have the Robinhood earnings tonight, which will be massively affected by this, because they make a lot of money from their margin, and I know I've paid them a lot of money in margin, so there'll be a lot of news around Robinhood earnings tonight. Okay, so we're going to give away a magic number again shortly. If you want to be on the show, the live video phone-in is in the chat. You can call in. Now, for those of you thinking that's it, I can tune out, you can't, and that isn't to try to get you to stay and watch and all the rest of it. It's because the most important moment is when Jerome Powell takes the stage, and then the next important moment will be when he answers questions with the Fed, because when he answers questions, the press, that's when the market will go up and down. Do not expect this to be over. There you go. See crypto bouncing around. My trade is waiting to be done. I'm up on Coca-Cola. I can take the profit. We now know where we are, so there's nothing major going to happen really at the moment to the S&P. There will be to individual stocks, but not the S&P too much. I'm hoping it will trim off in a moment with my Coca-Cola up, and I'll make my 41st trade and my 40th win. There's no reason why not. I could sell my Coca-Cola now, but then I am chasing, because I'm hoping and I'm sort of gambling on the S&P going down and Coca-Cola not going up, carrying on without me. So I don't want to do that. I want to wait till both pieces are intact. Okay. Whew, what a day. What a morning. Now then, if you missed the show today, I'm just going to share this with my guest today. We had quite a special moment today. Let me just clear away this again. I don't know if you guys saw, but this morning, live on the show, there was a big YouTube channel with 250,000 subscribers streaming our show. They were sharing our content on the screen, and it was really quite cool. Some of the viewers told me it was going on, so I then started to share them, and they noticed that I was sharing them, and we all started laughing and enjoying it, and they gave me a big shout out. It's a big channel with 250,000 subscribers, and they've asked me to go on their show, so that'll be an exciting day, and I hope you'll all join me and spam the channel and all that kind of stuff when we go on there. Anyway, let me go to comments and questions now. What I'm going to do is I'm going to move my my guests up to the top so I can put Brian in spot number 8, and I can put Justin Duke in spot number 9. So that way I can bring questions in at the bottom. And we are just waiting now for the main conference to start, which is in 15 minutes. So what we're going to do, just for a few moments, we're going to switch to members only to give everybody at home the chance to ask questions. No one gets left behind. Everyone gets a voice here on the show. So we're going to switch to members only just so I can filter out trolls, bots, scammers, anybody else that just wants to create havoc in the chat. And if you've got a comment or a question, please repeat it now and I will read it out on the show. So here we go. If you are a member, you can have your comment on the screen and you can ask me anything you like. Is the rate decision tomorrow? No, the rate decision has just happened. The rate decision has just happened. If I was another country, just trying to understand this, I would implement tariffs. It's only taxing your own people. That's one view. Yes, Sean Hussey, Yeppers. I'm not sure what that means. Time to fire, Jay. Well, apparently that's what Trump wants to do. We'll see if he does. The market doesn't care. Of course, the market doesn't care. The market isn't. It's not a personal thing, but very often people mistake the market and they think that it's the market has something to like people say, stuff it to the man and all this kind of stuff. It's not the case. Wall Street isn't trying to, cripple the retail investor, or they don't even know you exist. That everyone is just trading and investing in their own strategy. When I'm selling Coca-Cola, I'm not trying to do down the I'm not trying to do down anybody who buys Coca-Cola. I'm doing it because it's the right move for my strategy. Everyone plays the game their own way. So there's no conspiracy going on. The market doesn't care. Well, he doesn't care because he doesn't know you exist. JP is a reptilian alien. Okay, fair comment. I think let's go. I think we'll just go to members only now. I'm not sure what that comment means. Okay, here we go. Here are members. This will be bearish for XRP. It most certainly will. Crypto today wanted a rate cut. It will be, but that presents opportunity. Let's have a quick look at our XRP. And crypto, yes, as we expected, it's going down. This is great. This is why I'm waiting for a much bigger dip. The rally for XRP will be in September when we get the ETF. So between now and then, it's accumulation stage. If you can't afford your portfolio to go down 50%, you shouldn't be in. And if you're using margin, you probably can't afford that either. You get wiped out, especially if you're using 10x margin. That doesn't bother me. I actually hope XRP goes down, even though I would lose about $3,500 if it went down 50%. But of course, I'm not losing it because I'm not selling it. But I hope it does go down, quite frankly, so I can own more. Because all of you, or many of you, will get scared and dump it, and I'll go, thank you very much, and I'll buy it from you. So it's entirely up to you. I'm ready to buy it from you if you wish to sell it to me. Let's carry on with our questions. Martyn, what makes Bitcoin worth its value? Absolutely nothing. TX Ghost. Absolutely nothing. You buy, Brian. You like that one, do you? I'm
sorry. Yeah.
It's okay. No, it's okay. It's good. I like the reaction. It's good. The reason why it's going up is one reason and one reason alone. It's being adopted by other people and they're buying it. That's it. If no one believed it, if no one bought it, it wouldn't go up. If everyone sold it, it'd go down. It doesn't produce anything. It doesn't make anything. If you put some Bitcoin in the ground and leave it 20 years. Still be the same. Nothing happens. It only goes up because people believe it's going up. It's a very different investment. That doesn't make it right and wrong. It makes it very, very different. Now, if everyone buys it and adopts it, it will go up. But is it an investment? Well, if you buy a piece of land, imagine you buy a farm somewhere and nobody wants to give you any money for the farm. The farm has gone down in price. You bought the farm for $1 million and now the land is worth $500,000. You've lost money. Nobody wants to buy your land. For some reason, where you've decided to buy your land isn't popular with people anymore. It doesn't matter if when you plant things in the ground, it produces goods which you can then sell. So if you have some land and you bought it for $1 million and it goes down to $500,000 in value and nobody wants to buy it from you, but you're making $1 million a year with corn and wheat and things that you're producing out of the ground, your investment produces something and you'll always make money because you're producing something out of it. Bitcoin doesn't produce anything. Now, XRP, slightly different, more so Ripple, I should say. The XRP is the token of Ripple, but Ripple will make money because the banks will make money because they'll move money around more efficiently. So by owning Ripple, you're making money. By owning XRP, you're owning the representation of Ripple. But you can't buy Ripple at the moment unless you are a private investor, which is another story for another day. But so that's what the difference between XRP and Bitcoin. Bitcoin isn't worth anything unless we say it is. And we only say it is because others. Day at work for me today, just be able to tune in right now. What are the highlights of the day? Well, we've had a rate pause, but it's Jerome's tone today. Jerome's tone. Will he mention crypto? Will he mention digital payments? All of these things are what we're about to learn in 9 minutes from now. Can we vote to fire JP? Yes. As a member, you can ask for a poll. So I'll ask you a poll right now. Here we go. Would you fire JP? Okay. So yes or no. There you go. There's no undecided. Would you fire Jerome Powell? Yes or no? There's a poll in the chat as requested by one of our members. Where do you see XRP in 5 years' time? I can't see that far out, but what I can do is I can look at it and I can see $10 easily achievable imminently. It would have maybe even happened today if we got a rate cut. But we didn't. So nothing's happening. The market is hardly moving at the moment. It's very depressing from a trader's point of view, an investment point of view. It makes no difference to me at all. It allows me to earn more money. Every month I get paid and I can buy more at these levels. And that suits me because as an investor, I don't need the money today or tomorrow. I need it in years to come. So that's fine. As a trader of Coca-Cola into VU, it's a bit boring, but that's okay. Boring is where people will make a mistake and go, oh, I'm just going to sell it and get back into VU. Or I'm just going to sell it and buy Bitcoin. No, I don't lose. I'm not going to lose. I will wait. Coca-Cola will go up. And when Coca-Cola next rallies, I guarantee the S&P will sell off. That is what happens. No matter how small, it will happen. And when it does, I will sell Coke and I'll buy it back into VU. Now, if it doesn't and it goes sideways in 3 weeks' time, I will earn $400 by owning Coca-Cola for the dividends. So either way round, I win. Just got to wait for 3 weeks and I'll earn $396, I think it is, the dividends on my position. So either way round, I'm going to win. 100%. I will not lose. So we're having a little poll right now, and so far we have 64%, 150 votes saying yes, you would fire. Now I happen to know from experience, even though I'm completely neutral, not political at all, this channel probably gets 60% Republican and 40% Democrat. Why is that? Is that because of me? Most certainly not. I'm just completely neutral. I'm a guy from England. I have no say in it anyway. I only have a green card. The reason why that might be is because we're a financial channel, and financial channels tend to have more Republicans than Democrats. That's just the way it is. More investors tend to be Republican than Democrats. So it's quite typical for an investor channel to be slightly leaning towards. If it was 90-10, I'd be worried. That means I would be a political channel, and I wouldn't want to be that. 60-40, which is what we are, which is what the poll is also saying, because I guess Republicans say fire him, and Democrats say no. It kind of makes sense. That's why the poll is where it is, which is good. It means I've got a balanced show, because the fact it's an investment channel means I'm going to get more anyway. Yes, Brian?
On these videos, like I was telling you earlier, and I saw a lot of different videos on YouTube, and a lot of them are hype. You hear some say, "Oh, XRP is going to be $2,000 a coin, and in 3 years it could be $10,000 to $60,000 a coin." Is that even possible for XRP?
That's the wrong question. The right question to ask, is not whether XRP is going to go to 1,000, 10,000, a million, pick a number out of the sky. The question is, why do they say it? The reason why they say it, let's go back to what this is all about. Whether you're a YouTube channel, a TV channel, selling the news, everyone's job is to get you to watch, because when they watch, you make money from ads, sponsorship, deals, whatever. Whether you're a newspaper, whether you're a YouTube channel, BBC News, CNN, Fox, a movie, a pop song, a record, everyone's job is to get you to consume their content. That is how they make money. I don't. I don't, because I made my fame and fortune as the world piano man. I've traveled all the whole world. I've done everything I've ever wanted to do. And I do this live all day, every day, because I like entertaining and helping people. All right. So I'm not here to sell videos. Even though I do earn money from the ads, every few minutes an ad comes up, I earn money.
Sir. I got you.
Right. But I'm not selling a story. I'm just telling you how it is. A lot of people on YouTube.
That guy, his name is
hang on, Brian. Let me finish, because I want to be clear. The audience need to hear the answer that you just posed. So when people on YouTube say XRP is going to 1,000, 10,000, they say that because the sort of people that a lot of people that buy crypto, that watch YouTube, are influenced and excited by that news. It gets them excited. It gets them really, and I can see how excited you are. You're showing me a YouTube channel. You're all engaged, right? So you have done exactly right. You've got emotionally involved. Okay, they've got you fired up. I did. Right, exactly. And now you watch and you make them money. Now their content is worthless. It's rubbish, but it doesn't matter as long as you watch it to them. I can't do that, because that's just not a good way to live my life. Just talking rubbish. If I made a video today or a live stream and I said, I've got news, and I actually do speak to Bank of America, I actually do have real connections. So people trust me, they believe me, right? If I came on today and said, I've spoken to Bank of America, and I believe next week XRP is going to $1,000, and I can show you the proof, and just say that, I would get 100,000 views on the video, and that video would earn me about $1,000. It would be a complete lie, a complete load of nonsense, but I could say it if I didn't care about my audience. Well, a lot of people don't care. They only care about, how do I make $1,000? Let's just say anyway.
Nowadays it's like that. You're right. Yeah, right. It's just, I'm not like that. I like to help people out too. I work on a camp. It's called Camp Beering in Kuwait, and I help the soldiers out here by helping them out with Wi-Fi internet when these guys that are local nationals rip the soldiers off, and I give them the better deal. But I'm like you. I like to help people out.
Very nice. I like that. I've got 3 minutes to go before the main broadcast starts, so stand by. But that's why they say these things. It's not look. If I say, and my main message is every day the same: buy the S&P and do nothing. Nobody will watch. Nobody will engage. That's the truth. Right? So I try to get as close to that as possible. I'm not going to come out and say XRP is going to go $1,000 unless I have the facts in front of me, because it would just be a lie. Yes, sir. That's why they say it.
I like you. You're a good guy. You're honest. I like that.
Well, I try. I try. But you know what? It's easy to tell the truth. If you lie, you forget what you said. And if you're live all day, someone would say, I've got a video of you last week, and you did say it's going to go $1,000. I can prove it. So I can't lie, can
that's easy.
It's dead easy. I don't edit the videos. Right, we've got 1.5 minutes to go. So I've got just a chance to do a couple more comments. Stand by. Dallo, where do you see XRP in 5 years? I don't know. How can I know? There's no earnings reports. There's no data to suggest anything. We can give predictions and based upon the use case and how it will be implemented and how much money it could earn. But to say, where do you think it'll be in 5 years is just, I'd be guessing. So there are plenty of channels that will come up with those numbers for me. And you'll watch them because
where are you at anyway? What are you in? What country are you in?
I'm in Dallas, Texas.
Oh, wow. Oh, okay. Okay.
My home is in the UK.
You just blew me out of the mind just because of your accent. I'm sorry.
Well, I am from the UK. I have my house my home in the UK. My studio is in Texas. Right. Okay. Yes, I've got to leave you for a minute now because we're about to go to the call. Here we go. So we're on standby. We've got 30 seconds to go, so let me refresh all screens. Here is Jerome Powell, who will be here in a second. So let me refresh the back of the screen as well. Here we go. We're just waiting. Stand by. We've got exactly 10 seconds to go. Okay, here we go. So stand by for Jerome Powell live on the show. Here we go.
Make them out in 2 seconds. Make them out in 2 minutes. We'd have to say goodbye, Kyle, so you'll forgive me for jumping in. Quickly, do you think the Fed has any visibility on tariffs and inflation right now?
Look, I think it's obvious that that we're going to end up around 15% across the board, and China's going to be materially worse, and eliminating that de minimis exemption. I can't tell you how important that is for the United States, and actually to combat fentanyl being shipped from China to Mexico into the U.S. and directly into the U.S. So the answer is yes. I think that
our second number is coming at the end of the speech before we do the news conference. Stand by.
Saying that
here we go.
We got Kyle Bass. Thank you very much. Sorry to cut you off. Here is Jerome Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices
there it is,
for the
Brian,
benefit
for
of
you.
the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer-run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak.
Another all-time high.
In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals
I'm
matters
ready to sell
all
Coca-Cola.
Americans.
I just need S&P
We
to trim off
understand that
now.
our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention
Here is my second number. Here is your second magic number.
Is that
the magic number,
realistic at this point?
write this down, is 634. Magic number is 634. 634.
Inflation
That's
is running
it.
a bit above 2%. As I mentioned, even excluding tariff effects, the labor market's solid, historically low unemployment.
Good luck. There's
Financial
one more
conditions
number
are
at the end.
accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
there have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still. So you're right. It's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period. But we're still, a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all very,
non-subscribers can
very
chat
similar
in the chat
to where
now.
they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because if it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market? So
let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean I wouldn't insist upon that. But I don't think I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
There you go, XRP with no cut.
Michael
Liquidity
McKee
is not
from
there.
Bloomberg
That's
Television
going down,
and Radio.
so I hope you didn't chase that.
The one big bill, leaving
And
aside the
very soon
adjectives,
we'll have my deal for Coca-Cola.
Do you expect it to
It's
add
coming.
stimulus
I've
to the
waited all
economy
day
in
for this.
2026, and would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, you know, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, you know, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good for, if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Very good question, Nat.
Victoria.
Hi,
Down
Victoria
goes the
Guida with
S&P.
Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, you know, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too. So it's quite important for our economy, and certainly for the Fed's work and other government agencies' work, that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying is a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving...
It's coming for the first time today. Coca-Cola is outperforming the S&P. There it is.
Of the fact of the tariffs.
Patience. I've been waiting since 6 o'clock this morning. Once Coca-Cola turns green, I'll sell it and buy back the S&P.
And you saw it famously in the first administration of President
Trump.
Just
wait.
During those tariffs, washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up
now
too,
as well,
just like
because as S&P goes down,
so
money will flood into safer zones.
Companies will often just go across the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very
gaining
beginnings
momentum as well
of whatever the effects turn out to be on goods inflation.
Crypto going
I'll say again,
down.
They may be less than people estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed rate.
S&P and Coca-Cola are separating quicker and quicker.
We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, and that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it's It could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation.
Oh, back upstream, stand by.
And the labor market was pretty good, so you know, that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. The totality of the evidence, as I mentioned, there's quite a lot of data coming in before the next meeting. Will it be dispositive of that? You know, it's really hard to say. We don't make those decisions
Here it comes.
Right now, so we'll have to see.
Well, I guess just in terms of inflation,
Here it comes.
though, for example,
Here it comes.
Some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's
get ready to sell Coca-Cola and buy the S&P.
Tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down?
I think
closer to 2.
We'll look at everything. You know, it's as I mentioned. You know, a pretty reasonable base case is that this will be a one-time price increase, and in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't. Again, if we cut rates too soon, maybe we didn't finish the job with inflation.
I can sell it for a wash and buy the S&P down 0.5%. That means I saved my money dropping.
You're doing unnecessary
was able to preserve my money and then buy it back at a lower price.
We're trying to get that timing right.
Perfect.
And that's effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target.
So this goes back to the division of labor between the Fed and the Treasury.
If you're following my trade, let me know in the chat that you're doing this.
The Treasury only speaks to the dollar. It's not something that's been a topic of
come on, separate.
Major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the U.S. economy? Thank you.
You know, we're monitoring the situation. We do, of course. I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that. But if we have to make do with what we have. But I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Afternoon, Chair Powell. Maria Eloisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level. And delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true. And it was, again, right in line with what we expected. The GDP data that we got this week.
It's
so
separating.
I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which
crypto's giving up, rolling
which
over.
Which may also be affecting, some of that can be
Come on, we're so close.
Can affect consumer spending as well.
Money will go into Coca-Cola at any moment.
That we pay most careful attention to.
We'll give it to it.
And there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at
we're finding a bottom now.
To unemployment. Those things have been pretty stable.
Could be a good buy here.
They haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. It's not, you don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around all the way around the table, everyone gives their views. So the discussion around policy was the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where an unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So you have to. That means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wonder if you look at that and you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not going to say that. No, I just think we're going to need to see the data, and it can go in many different directions. The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
That was a good time to buy XRP.
Rob, for the last question.
Gained a percent there. That was a good.
Thanks, Chair
I gave
Powell.
that
Greg
to
Robb
you.
from MarketWatch.
Good time to buy XRP.
The Treasury
Gained a
Secretary
percent.
has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Okay, we are done. Thank you very much indeed, everybody.
And so concludes Federal Reserve Chair Jay Powell's press conference explaining the committee's decision to leave rates unchanged and also perhaps reducing the perceived expectation that we...
Battery's gone in my foot pedal. Okay, backup systems are all over the place this afternoon. Okay, so let's wrap this up. We've got a big event coming up for you in a second. We've got another giveaway. We've got a magic number coming up in a second. So this is the situation. We've got a rate pause as expected. It wasn't what I was expecting. I wanted to see a cut today. There was an opportunity to buy some more XRP. It went down over nearly 7%. 1.5% there was an opportunity. I called it out and said that was a good buy. You could then buy that and then use tax lots and sell the ones at a higher price on the way back up again, and get your money back without paying tax or out making a loss, and hold the lower price ones. That way you end up with more crypto, more XRP at a lower price. That protects your account. That's a good move. That was available. We've also got it got very, very close to the S&P went down nearly over 0.5%, and Coca-Cola was going up. I was very close to being able to sell Coke for a wash, make no money, but I would have bought the S&P at a lower price. So that way I'd have made money that way. Remember, I'm looking to make money on both ends, making money from the sale and money from the discount. So even if Coca-Cola had gone up to a wash and it was getting very close, it was only a few cents away and I'd have been at a wash. But remember, I'm not going to lose. Absolutely not. I could have sold that and then bought back the S&P at 0.5% down. I would have gained a little bit. Because if I'd remained in the S&P all day, I would have gone down to go back up and never benefited from it. That's the power of trading on your Roth IRA. That's what your fund manager does on your 401k all day if he's active, and that's what I'm trying to do. It hasn't happened, it hasn't occurred, but that doesn't matter. It might happen overnight. I'll be watching it, and I will be back in the S&P on my main account. No question about it. Over on the main account, which is S&P at 92% and 8% crypto. It's going back down again, so don't chase this. XRP and Bitcoin's going down again, so there was a quick trade there. The S&P and VU all go and Coca-Cola all going down again now. So we'll have to wait for this. Maybe in the after hours we'll get to swing up. So we got a few things to talk about before we wrap this up. I'm about to give you your third magic number. Add them together, and then you'll be able to enter today's competition. So tap the like button if you haven't yet done so, and consider subscribing. Thank you very much indeed. I'm going to keep my eye on all of that. I'm going to go to my guests now. Let me just go to my guests and see what they have to say about everything they've just seen. Guys, what do you feel? Are you happy? Brian, come to you first of all.
Oh, yes. I mean, from my experience learning from what you're teaching me, I mean, it's a hell of an experience. Thank you for everything. I'm not as smart as you are. I mean, I'm praising you beyond praise because I just don't know this as well as you do, but this is a learning experience for me. And just hearing what they're saying, you know, I'm so new in the game. So thank you, though.
Do you know what, Brian? I love the honesty. Let me tell you the truth. Most people watching today, and me included, don't understand half the bloody stuff they say. They just pretend to know it all. All right? There's stuff that was mentioned today on the call, and I'm going, I didn't understand that. There's people in the chat going, I didn't understand that. But they don't admit it very often. Oh, yeah, I know what's going on. Most people don't have a bloody clue, mate, including there's many things that were mentioned today I didn't understand, but I will go away and try to learn more. And we're always learning more. So we all learn together. I learn as much from you as you do from me. We all learn together. As long as we're honest with each other and say we don't know when we don't know, we gain something. If we just pretend we do, and the only reason why people say that is because they're insecure with who they are. That's why people lie. They go, oh, I know all about that, because they don't want to tell you they don't know. It's okay to say you don't know.
I'm not like that. I like to hear everybody's words and how they're talking about all this, and then I try to pick up and do my research later on, and I learn from, like I said, this last 2 weeks. I wish I would have knew about Bitcoin back then. I'm 57 years old. I wish I knew about Bitcoin back then. Oh my Lord, I would have been so rich, but
well, you probably wouldn't have been, because if you'd bought it for a penny or $1, you probably would have sold it for $5 because you thought, oh my God, I've had a 5x. You probably wouldn't. Not many people bought it at the beginning, held it where they are now. So, and if they did, and they sold it, then when the tax man came knocking on the door a year later and say, where's me 100 grand tax you just made on that gain? Oh, well, I spent it on something else. Now they've got to sell and borrow some money to pay off the tax man. There's a bigger story to this. Not everybody wins as much as they tell you on YouTube. Brian, thank you for being part of the show today.
Also, I would like to learn more about, I know you don't have much time tonight, but I'm going to look more into you and talk later. And I need to learn a lot from you, because right now it's over here. It's, if you know military time, it's 2200 right now. So I do kind of like
evening. Yeah,
breaking down right now. So I'm like, sipping on my drink.
I've got to move on. You can call in the show anytime you want. If you ever go gold, you can be a gold member for 1 month, always downgrade to bronze again. You can have a one-on-one private call with me if you want to do that. There's all sorts of things that you can do, and I'm here to help you. Whenever you call into the show,
how much is the
when
gold?
You're in the chat. Sorry?
The gold. No, you said it's $99, you said, for 1 month?
No, $26. That's all it is.
Oh, shit, that ain't nothing. Okay.
I know.
All right.
I know. I've about 30 gold members, and fortunately for me, they don't all take me up on the 1 hour call because I would be very busy. But several do, and you can just in the chat come in and say, Martyn, can I talk to you and claim my 1 hour this month? And I'll go, yeah, no problem, mate. And live on the show, I'll say tomorrow at 11 o'clock, and you'll go, all right then, and you can call me up. As simple as that. You've always got someone you can talk to. I'm always here for you. Come in the chat.
Well, send me a link on how I need to enroll in that gold membership. However you do it.
You just go on the membership where you become a member, same way as you did, and there'll be an upgrade option.
Okay, I got you.
Very simple. And you can always downgrade at any moment, cancel, go bronze again, whatever you like. All right, mate? Okay.
Yes,
cool. Final thoughts from you, Justin?
I still think he's political. And I figure we'll probably... Isn't the inflation report tomorrow? Like inflation?
Yes. Yeah, we're going to cover it live on the show tomorrow. CPI. Won't it be ironic if the inflation's down tomorrow?
Wouldn't it?
Wouldn't it?
I can hear Trump right now. He is fired so big. He is going to be fired.
Yeah, if inflation's down tomorrow, it certainly will be a slap in the face. If we've got inflation falling tomorrow on the show, make sure you join me in the morning. That's going to be ridiculous if that happens. I totally agree with you. Right, Justin, we're running out of time. I've got to go. Thank you ever so much, guys. Thanks for calling in. I've got to let you two go. I'm always here for you. Call back. I'm about to give you the magic number. Now then, I've just got to double check something for me because I'm running out of time. We've got a big event coming up. I'm going to give you a magic number right now, but also Robin Hood earnings. It's a special event tonight, live on the show. The Robin Hood earnings. Let me just double check. Preview the earnings call. This is happening tonight. I've got to get in a special event before this. This is at, let me, wait, pause that. 4 p.m. So I've got an hour and a half. So I've got an hour before I've got to be back with the Robin Hood earnings. So let me drop this up here. So let me tell you what's going to happen now. This is very, very exciting. Pause that. There's that. Right. This is what's going to happen, folks. We got a jam-packed evening for you tonight. Robinhood, by the way, if you haven't noticed, has just gone up on this because they make a lot of money from margin. They don't mind the rates being high. Remember I told you some businesses don't care about the rates being higher for longer. So what we're going to do now, I'm going to end the show right now. I'm going to give you your last magic number. You can all go and enter this on the competition page, martynlucas.com/giveaway. Free to enter. We're giving away $1,000 of XRP live on the show. There is the competition page. It's pinned to the top, martynlucas.com/giveaway. Okay, there is the information. When I give you your last number now, add them together. You can go and enter, and then you have, you add the three numbers together, the one at the beginning, middle, and end, add them together, enter that on the competition page. Just down here, you'll scroll down, you'll sign in, and you'll click right there. That's the live show. You'll put your number in there. Okay, that's what you're going to do. What I'm going to do now, though, is I'm going to give the magic number, and then I'm going to hand you over to our next special event. We've got a special event. We got Vaz waiting to go live. Some emergency information on EVTOLs. Prepare for Archer. This is going to be huge. We got EVTOL earnings around the corner happening later on this week. And we got emergency breaking news information from our man who goes and meets these people in person. Vaz travels around the world for us now doing interviews with people. So I'm going to give you Vaz's show. It'll automatically take you there into Vaz's show. So let me give that now. There is the link. As I end the show, it'll automatically take you there. Now, right after Vaz's show, Vaz will be live for about 45 minutes. Stay with Vaz, because as Vaz comes to an end, it will take you to the Robinhood earnings. And this is essential viewing on a day after we've just heard from the Fed. You want to hear about the stock market with Robinhood. That is coming straight up after Vaz's show. There is not a link posted for that. So the only way you'll get the link is by watching Vaz's show, and I will post it in Vaz's show. It's going to be a special event. There is no link. It's only available for those that are in Vaz's show. I will give you this. Robinhood, you cannot afford to miss that. Right, the markets are still going down. I can't buy. I don't want to buy. Now, what I might do, you've missed XRP. That is gone. That opportunity of 6.5% drop is gone. What I might do is the S&P is still going down. I might buy some S&P on my main brokerage account using some margin to buy the S&P, because the S&P is now down significantly. It's down 0.5%. That is quite a bit from here, and there's no reason. It's a reaction to the call. So I might go into Robinhood now and use my margin and buy maybe $5,000, $10,000 worth of the S&P 500, because we are now down. We are now up only 0.25% on the week. It wouldn't be a bad time to buy a bit more of the S&P. I'm not going to just yet, but I'm going to be watching that, and I might do that in a minute when I'm watching Vaz's show. So everyone is ready in Vaz's show. I'm going to give you the magic number. The show will come to an end, take you directly into that show. Vaz, you've got all the information. Wait in Discord. I will give you the go when you can go, because I have to end this show completely before you can go. But I'm now going to give everybody the magic number. Are you ready? Don't miss Vaz's show. Vaz's show will give you the link to Robinhood. Okay, folks? All right, and I'll be in there as well, letting you know if I've bought more. I'm still waiting to sell Coca-Cola, and I'm waiting now to buy the S&P. It just isn't low enough for me to buy any more with margin at this precise moment, but I'm always happy to accumulate more. All right, it's now time to go. I'm going to give you a last magic number. Stay right where you are. The link is in the chat. It's also pinned to the top. Let me give you that as well. Pin to the top. Here we go. Next, NEXT. There it is. Pin to the top. Boom, 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 boom. Pin to the top. There's a replacement. There it is. The giveaway is gone now. It's martynlucas.com/giveaway. You can go there anyway and enter the competition. I'm sure you've all got the link. martynlucas.com/giveaway. But there's the link to Vaz's show. We're going to end with the magic number. here it comes, and then go straight over to Vaz and then come and join me for Robinhood. So here is your magic final number. Your last number of the day, add them together to enter for $1,000 is 987. 987. 987. Add them together, martynlucas.com/giveaway. I'm going to end. Join Vaz now, and then I'll give you the Robinhood earnings. See you back for the Robinhood earnings. Take care. Bye-bye for now.